Plant assets, tangible in nature, actively used in operations, expected features, future benefit, and generally called plant, property, and equipment. Predominantly what we're going to be focusing on today. And so tangible in nature, actively used in operations, expected to benefit future periods. So buildings, equipment, just know this definition. If we don't have one of these hit, then generally it's not going to be considered plant, property, and equipment. So tangible asset, right? Tangible in nature. Why does it have to be tangible in nature? Tangible in nature, we're talking about, if we're talking about like software, or if someone owns something intangible like a license or owns a intellectual property, right? That's not going to be considered plant, property, and equipment. That's going to have different accounting recognition, actually quite complex accounting recognition principles that we're not going to go into in this class. We're just going to talk about tangible in nature and then briefly cover intangibles later. Actively used in operations. So if we have something that we aren't using, we have to consider if we're not using the asset, we can't have it on our books, and that's its own policy. Expected to benefit future periods. If we don't expect any benefit from it, we have to impair the asset, especially if we're not planning on selling it, and there's no real value to it. And then if it hits all three of these, then we can call it plant, property, and equipment. So know this definition, it is important. Plant assets. So we've talked about this. Acquisition, we compute the costs. We're going to allocate the cost and treat subsequent expenditures and then record the sale.